Let me put it this way. Bad underwriting is ownership neutral. It could happen in public sector or private sector. Therefore, ownership alone does not decide the quality of underwriting.
Good afternoon. Thanks for tuning in. You're watching Ask PQ on Bloomberg Quint Live. I'm Navneet Saluja D'Souza.
Hi, Navneet, and hello to all of you. I'm Alex Matthew. If you've got equity-related queries, well, this is the place to ask them. You can write to us on Twitter, Facebook, and YouTube. And we also love live callers, so you can call us on 022-454-04141. Alternatively, you can also mail us at askpq@bloombergquint.com. Just add the AskPQ hashtag. Our two experts of the day, Brijesh Singh of StockAxis Advisors and Sandeep Jain of Tradeswift Broking, are here to help you out today. Welcome to the show, gentlemen.
All right, but before we get to the individual queries on the show, here's a quick look as to what's happening with the markets. Well, the week has started off on a very positive note. We did see some gains in yesterday's session and follow-on buying seen in today's trade as well after the cues from the Asian markets were positive. Nifty continues to trade above the 10,400 mark, but it has come off the day's high. I think it was somewhere about 10,426 levels, which it had touched during today's session. Let's just pull up the Nifty futures. Just want to highlight the premium once again has contracted on Nifty futures from yesterday's closing premium. So when we started the trade, premium was somewhere about 13 to 14 points, which has come off to about 7 to 8 points. That basically tells you probably at these higher levels there could be some short positions being taken on Nifty futures. Bank Nifty is the one which is in focus, and today Bank Nifty's rally is being propelled by the gains that one has seen for some of the private banking stocks. We'll discuss all those stocks in details, but Bank Nifty April futures for the second straight day, they're trading with a discount of almost 20 points as we speak. Open interest up nearly 16%. The broader markets are having a mixed session actually today, though the advanced decline ratio, which will come up on your screen, looks okay. Nifty mid-cap index slipped into red, recovered marginally, and now the advanced decline ratio is actually in favor of the decline. 7:8. That's the NSE stats there on your screen. Pull up the Nifty contributors list. That's going to give you a clear picture as to which are the stocks which are capping the moves actually in today's session on the upside. So your biggies, heavyweights like HDFC Bank and HDFC are trading in the red, and Tata Motors, some cool off after being the top gainer in last week's trade. And on the gaining side, as I mentioned, it is the private banks which are doing pretty well. ICICI Bank is contributing 21 points. Axis Bank up for the second straight session. That's trading with gains of 3.5%. And also Infi, which comes out with its Q4 numbers this week after yesterday's week session, has seen a bit of recovery in today's trade. The metals index, in fact, the entire metal space has been in focus today. The metals index is your top sectoral gainer as well. And the reason for that is all your aluminum stocks are doing well. But if you look at the constituents of the metals index, Hindalco, NMDC, Nalco are the one which are gaining the most. And the reason being aluminum prices globally have risen in trade. The other pocket which is doing well are the sugar stocks. So you've got stocks like Dwarikesh, Balrampur Chini, Dhampur. All these stocks have seen substantial gains. There are some reports suggesting that the government may come to rescue the sugar mill owners who owe payment to sugar farmers. So the reports suggest that the government could be paying the sugar farmers. Now the news is not confirmed. It's only as per reports, but the stocks have seen good amount of gains. And two stocks, just want to highlight few stocks actually which are not doing well. Lemon Tree, which listed yesterday, had a good session in the second half. We did see some bit of bulk buying coming in. That's seen some cool off, down 7%. Canterville Retail, IFB Agro are the other ones which have seen some cuts. And at a 52-week high, you've got stocks like D-Mart and Divi's Laboratories which are having a great session.
All right, Navneet, we're already getting a lot of queries, so let's get started with the first one. Anujiva writes to us on YouTube. She wants to invest in Godrej Aggregate with a long-term view. She wants to know if it's advisable to enter the counter at the current levels. Now, remember, Godrej Aggregate is a recent listing. It was listed in October last year, and it's had quite the stellar run so far this year. It's up about 24%. I'm going to go to Sandeep with this query. Sandeep, you've spoken about the agri theme and the fact that you're positive on it, but this particular stock has had quite the run so far this year. Anu wants to know whether it's advisable to get in at current levels.
I think he should wait for some time because it has given a big spike yesterday only. and today also it's trading negative, but still. But what I feel is it's a new listing also, and then the company is in talks with Ruchi Soya also. I think that deal might boost the company's businesses, but still, it might dilute also in the near future its EPS. So I feel, he should wait for some time, let it come down, let it cool down a bit, somewhere around 625, 650 will be the levels where, one can enter, and 800 can be the target for this stock, because valuations are all not that cheap, because the company has a great pedigree, so the market is giving a very good valuation to the company. So I feel he should wait for some time for the decline.
All right. Hold on and wait before you buy Godrej Agrovet, and look for the level of 650 before you invest.
Okay, and the stock's done quite well. It's up nearly 22 to 23% for the year. Let's take our next query for the day, and this one is from Shivam Chug, who's calling us from Mumbai with a query. Hi Shivam, good afternoon, and thanks a lot for calling us today. Tell us what's your query on.
Hi, my query is, I have a 50 shares of Analyst at 365. I bought it when it fell due to the Vacancy news around the segment. And shall I wait for 2-3 more months or book my losses? Because right now I checked the huge loss.
Any specific reason, Shivam, why you bought into shares of PC Jewellers? Was the reason only that because the stock corrected sharply?
It corrected sharply, and those days it was moving heavily towards the 400-420 ranges.
Okay.
So
yep.
I had a short-term view in that line.
Okay. Short-term view on PC Jewellers, and actually if you look at the 52-week high of this stock, it's somewhere about 600 rupees. It has come off to levels of 307. As Shivam highlighted, after Vakrangi bought stake into PC Jewellers, there was a sharp correction seen for both these counters. Brijesh, let me come to you. 2-3 months is the time horizon that Shivam wants to hold on, and he's bought somewhere about 365. He's asking, should he book his losses or he can wait for the next 2 to 3 months?
See, I'll say hold on, since the stock has corrected from a level of 600 and it's been trading above, trading near 307, almost more than 50% of the correction it has been seen. There are two ways of trading, first of all. One is keep a stop loss of 285, because the 285 base has been formed. If anything breaks and trading below at 285, then I'll say better to exit as soon as 285 breaks. Otherwise, hold on, since the chart 285 base has been formed and it's been trading above that. Immediate basis 315, 320 are the resistance zone, and if it crosses that level of 315 or 320, the next level to watch on the high side would be 345. So I'll say hold on, because as a chart I'm looking within 2-3 months, stock would be bouncing and it might try to touch once 345 level where he can book his losses. And if he wants to invest in a jewelry, then Titan looks good on a weekly charts and as well as on the monthly chart. It's been trading on higher tops and higher bottom formation. So anything below 950, if it able to get, he can look out for buying this stock with keeping a stop loss of 900 or 910, and the upside resistance lies at 1020 to 1030 zone. Anything above 1030 on closing basis, and the next level to watch would be 1100, which might be achieved within a 6 month of time frame.
All right, that's a view on Titan. Let's move on now. Srinath Prasad writes on WhatsApp, and he has 1,500 shares of BEL, and I believe that he's averaged, and his average price is about 130 rupees. From here on out, he has a 1-year view, and he wants to know whether he should hold or sell at this point. The stock is currently around the 145-46 mark. It's corrected significantly over the past few months. In fact, the year-to-date correction is close to 20%. Having said that, there are a lot of analysts that are still bullish on this particular stock. Sandeep, do you also hold that view? Are you bullish? Because I think the major correction happened on account of a weaker than expected Q3.
Yeah, that's right. In fact, you're right that it has corrected a good amount of price. So somewhere around 25 to 30%. So I feel that one can hold the share, but I won't get very bullish immediately. I would rather wait for some more correction. But still, fundamentals wise, the company is great and the sector is actually very hot. the government has been very, very focused on the defense sector, and there are lots of policies which are favoring these companies. So I feel, and BEL is a very quality company also in terms of management. Dividend yield is also very good. So I feel, and valuations wise, a little bit on the higher side. So I feel that, one can wait for some 5 to 10 rupees of correction, and at that point of time, he can enter and do some averaging also.
Okay, that's the view coming in on Bharat Electronics. In fact, a lot of the analysts in the street have been bullish on the defense theme, and currently if you can look at Bharat Electronics, it's just trading mildly in the green with gains of 0.7%. Well, we're getting lots of your queries on our social media platforms. I'm going to go across to YouTube queries, and this one comes from Abhishek Gupta. He's asking, is there any stock that can be bought like an SIP, or he's asking our experts, is there any stock that they are bullish on with the next 5 to 10 year view? So Sandeep, I'm going to come to you. Is there any stock which can be bought as an SIP, or any stock that you would recommend that one should hold in their portfolio for the next 5 to 10 years?
See, there are a couple of stocks which we have identified, and I feel that, pharma sector has not done well in last 2 to 3 years. So it can be a good contra bet also. It can be a good level also where one can enter. So I feel Syngene is a great story from the promoters of Biocon, and in fact Biocon has given stellar returns, fantastic growth it has given. So I think Syngene can also do the same, being the management same. So I feel Syngene is a great story. Then Ipca Laboratories, again, this company has also been affected because of the US FDA issues. So 2-3 years, since last 2-3 years, it has corrected a lot, and the downside risk is also very low. And since he has to invest for 5 to 10 years, so Syngene, other than Syngene, Ipca is a good pharma story. Then I have been bullish on RCF, since he is has a time frame of 5 to 10 years. So RCF kind of story can really give him multi-bagger returns, because there is a land bank story attached to it. So these are some stories one can certainly bet.
All right, let's take a next query. This one from Shivani Dhanuka. She's asking whether she can buy Tata Steel at current levels and what her target and time frame should be. Shivani, I believe that the time frame should be decided by you, but in any case, I'll go to Brijesh and ask him what the view is on this particular stock. Brijesh, if you can also tell us both the short-term and long-term views on Tata Steel.
See, stock from making up a low of say 552, 554, it has bounced. Now it's been trading somewhere around 596 zone. So as a trader, if she's looking, then I'll say then 570, 575 is a support. So if it comes somewhere around 590 around, then she can buy this share with a stop loss of 575. On a higher side, 625, 630 is a zone where she can book a profit for short-term view. If she's looking for a longer term view, then keep a stop loss of recent swing low, that is 550 or 552. Any dip somewhere around 575 or even say 580, she can buy these stocks. As soon as stocks is able to cross 630 on a closing basis, it can jump to the level of 700. So 700 is the target which I'm looking within 9 to say 10-month horizon, and she can buy at current rate or any dip somewhere around 580.
Okay, 700 is the long-term target which is being suggested on Tata Steel by Brijesh, and the stock, actually the entire metal space has been buzzing. So Tata Steel too has seen gains of almost 2% in today's session. Our next query on YouTube comes from Ankit Shastri. He's bought shares of Capacite Infra company which was listed last year at a price of 410 with a long-term view. He wants to know if he should hold, add or exit more, and looks like Ankit's bought post the listing because the issue price was somewhere about 250 and it had a stellar listing, but I guess the stock come off the high levels that one has seen around the northwards of 400 mark, and currently 340 is the price on Capacite Infra. Sandeep, if I could come to you on this, what would you advise somebody if they bought this stock at higher levels of 400, 410? Should they add, hold or exit?
See, now he has to hold because, the company quality-wise is good. But then I don't like the sector the company is into. But then the activity which the company is doing in the realty sector is somehow, profitable. But still, valuations-wise, it looks expensive. And the listing was actually very stellar, as you said, and he has entered at higher levels. So he has to wait for some bounce. Till that time, he can hold because the stock has really corrected But still, I don't have that kind of conviction in the stock for, say if he has entered it somewhere around 410, 415. So it might maximum go up to 450. So whenever he is no profit, no loss, so he might exit that stock, and there are better stories which can be bought in this sector even, like Mahindra Life Spaces and Ashiana Housing. They have also corrected a lot. And other than that, as I have mentioned, pharma can be a good bet, IT can be a good stories. So all these sectors should be, bet on rather than going into the reality.
Sandeep, quick query. We've got a query coming in on Facebook from Vimal Kumar. He's asking for a view on Jet Airways. I mean, that particular stock was in the news today because the company's dropped out of the race for Air India after Indigo. Any views on Jet Airways, Sandeep?
See, again, these stocks have also run up very well in last few quarters. But now, since the crude oil prices are going high and the ETF prices are also going high, and the competition factor is very, very high, and SpiceJet has been doing well. But then, this news actually is a positive news for the company, because Air India is not all that an easy company to manage, after being taken over. So, but still, I would be more comfortable with SpiceJet in the sector rather than Jet Airways and Indigo.
All right. That particular stock, Jet Airways, in fact, down over 2% in trade today.
Yep, I guess yesterday was a good day for all these aviation companies. All three of them saw a good amount of gains, and today's the day for profit booking for both Jet as well as SpiceJet, which have seen cuts of 2%. Interglobe Aviation, that touched its lifetime highs yesterday, touched the mark of 1500, but it's retreated from those levels. The next query on YouTube is from Akash Randev. He's holding 500 shares of Dewan Housing Finance at a price of 520 rupees. He wants to know if he should hold or sell. He's also asking what should be his target price and time frame here. Brijesh, I'll come to you. 500 is the buy price, currently holding somewhere about currently the price is 534, and he's asking what should be his target and time frame, if you could tell us on the charts.
See, I'll say hold on. First of all, the stock has been trading near the 40-day as well as the 200 simple moving average, that is somewhere around 540 zone. So anything above 540 zone, the next level to watch would be 575 zone, so where he can book his profit. Now on the downside, it has a support at the level of 510 to 515. So I'll say hold on. Stock right now from past a couple of weeks, it's been trading in the range of 510, 515 on downside, followed by 535 to 540 zone. So it's been a positive sign. So I'm looking at as a chart like it has a chances of breaking that level of 542, that is a 200 simple moving average, and trading above that. Anything above that, then 575, where he can book his profit in short-term time frame.
All right, that's a view on Dewan Housing. The next query is a bit of a general query, and I think I'm going to toss it to you, Sandeep. Adit Shah is asking on YouTube whether you can suggest some good mid-cap IT stocks with a 3-year time horizon.
See, Tata Elxsi can be a good bet. FSL, as I have been recommending since a couple of shows, it has actually gone up very fast also in last, 1 month. In fact, very, very differently, it has outperformed the market. So we recommended the stock at around 40 rupees. Now it is at around 56, 57. So I think whenever it gets corrected to say 50, 48 levels, that can be a very good level to enter the stock for a better risk reward ratio. Somehow I really love the fundamentals the company has, the kind of bottom lines against the market cap. The market cap is around 2,500 crores and the bottom line is around 250 to 300 crores. So that's a fantastic market cap to bottom line ratio. So I feel these two companies are good bets. Then Mindtree is also a good bet in mid cap IT, and even the large cap ITs are also doing well. And I feel TCS can be a good bet in HCL Tech. These are some stories, and somehow I'm very bullish about the IT sector as well.
It'll be in focus later this week as well. Earnings are starting, Navneet, so we'll have to see how that pans out.
We'll be carrying Infosys earnings this week, so that'll kick off the earnings season for the fourth quarter. And Infosys, after yesterday's weakness, has seen some bit of buying. Okay, our next query is coming on YouTube, Sunil Chahal says he's holding 400 shares of Hoodco at 79. He's asking, should he hold on for long term or switch to another counter at higher levels? Let me just take a technical check on this one. He's bought at 79. Currently, the price is 70. Brijesh, what would you suggest? Would you advise him to exit from here and rather take a position somewhere else?
See, I'll say hold on. Stock has bounced from a level of 63. Currently, it's been trading around 70, 72. Still, a few bucks can be made on a high, so that his loss would be minimum. Somewhere around 75 to 76 is a resistance zone, so where he can book his losses, because the long-term chart are still not positive, as well as even the short to medium term chart. Till the stock is not trading above 85, there would be a pressure. So I'll say wait, use rise to exit. Somewhere around 75 is a resistance where he can book his losses, and on the if he wants, then he can look at the IT counters as well as banking. If he wants to invest in bank, then Federal Bank looks 97 has been trading. Keep a stop loss of 92. Look for the target of 105 to 108. For a shorter term time frame, is looking for a medium term, then 125 is the target. You can look out for buying NIT Tech. It's been trading somewhere around 888, somewhere around 860, 865 is the support. So you can buy that stock at 865. Your support, your stop loss would be 830. Higher side 910 and 915 are the immediate basis of resistance. Anything above 915, stock can jump to 995.
Sunil, a whole host of options for you there with regard to your holding in Hoodco. The next query, I think, Navneet, is quite interesting. It's from Akash Agarwal, and he's asking between Maruti, M&M and Tata Motors, which is the best bet with a long-term view. And it's interesting because one has a clear rural play, one has a clear passenger vehicle play, and the third depends on a turnaround with regard to JLR. Sandeep, I'm going to toss it to you and say, you know, which of the three would you pick? Is the rural theme what you would go for?
Somehow I would go with Tata Motors, and that also DVR version, that has good discount factor attached to it. And then Tata Motors somehow, in the recent past, their passenger vehicles have been accepted very well by the markets. In fact, in domestic markets, they were not doing well. And then their commercial vehicle segment is actually also getting some traction. So I feel that Tata Motors can be a good bet, and their international figures, sales figures were also very good. And then it has corrected very well. In fact, it has kind of bottomed out also. So I feel downside risk is also very low, and the risk reward ratio looks attractive now. So one can certainly get into Tata Motors, and at these valuations, Tata Motors really looks very attractive to me. And somehow Maruti is expensive, but then this is a typical investor kind of story and portfolio kind of stock, but then it has gone up very, very high. So I feel valuations wise, it's not that cheap, but still one can hold it if he has in portfolio. But Tata Motors is certainly a buy on decline.
That's clearly the general consensus view based on the correction.
I was just about to say, Sandeep, I'm not surprised you chose Tata Motors because Maruti is already run up, and Tata Motors currently is one of the cheapest stock among the Nifty constituents. And we keep highlighting because majority of the analysts still have a buy call there. Well, since we're talking about the auto space, our next query is on the auto ancillary company, and this one comes from Sumit Rugani, who's calling us from Mumbai. Hi, Sumit. Good afternoon to you, and thanks a lot for calling us. Tell us your query on PPAV Automotive.
Thank you so much for attending my call. You both put up a great show there for a newbie like me. Thank you so much. So, I have a query on PPAP Automotive Limited. I have been accumulating it from past 3 months, and my average price as of now is 650 rupees. Okay. And I have 200 shares of it, and current market price is at a 10% discount of it.
Yep.
And I am looking for it to hold for 3 to 4 years. So okay. I need experts view on that.
Sumit, any particular reason that you bought into this stock and you've been collecting it for the last 2 to 3 months?
For PPAP, it's in itself such a very good company. It's a proxy to Maruti. It has 100% supplies for injection molding and extrusion parts to Tata Motors and to Toyota, Kirloskar supplies. And also they have been recently pitching Hyundai for Eon and Creta. So I'm quite bullish, and they have set up a new plant in Chennai close to Hyundai and in Gujarat close to Maruti Suzuki. So in future, like Maruti Suzuki Swift, they have injection parts as well as automotive sealing parts. So if the company is in deeper relationship with Maruti and Hyundai, they are the major auto players in our country as of now.
Sumit, I might just put you in touch with our auto analyst to get an idea as to how you do your research, because you seem to have done quite the research there.
Well, kudos to you, Sumit. It's nice to hear retail investors who do their fundamental research before parking their money into any of the shares. But Sandeep, he's already done his research. Unfortunately, the stock's fallen, below his buy price. He's been accumulating for the last 2 to 3 months, and auto ancillary as a theme has done well in the last 1 year, and this stock too has given returns of nearly 130%. He has a long-term horizon of 2 to 3 years. Do you think he should hold on, accumulate more?
He should hold on. Rather, I won't advise him to accumulate more, because, it's a great story. Even I have heard whatever he has said, and he has done a very good research. And even I could also hear it from some other analysts, though I have not done research on my own primarily, but secondarily, I have listened to these kind of things which he has been, telling. So PPAP somehow certainly is a vendor to Maruti and all these big brands like Hyundai, Honda, and somehow auto ancillary sectors. I'm bullish on it also, but still, it's a small cap. So, during the last 2 months, small caps and mid caps were bashed by the market. So this particular stock was also the victim of that trend. But still, I would advise him to hold on to the stock. It's a good stock somehow, and he has done a good research also. It seems that he has some conviction in the stock, so no harm in holding it.
Well, that particular stock has doubled, in fact, Navneet, over the past year. More than doubled.
That's what I was mentioning. Most of the auto ancillary companies have been doing pretty well, and PPAP Automotive was one of them. And I think Sandeep highlighted a very pertinent point that when the markets correct, it is the stocks in the broader markets which tend to correct more. It's a company with a market cap of 800 crore. But fundamentally, as of now, Sandeep also highlighted, everything's looking fine with the company. So hold on to this one, PPAP Automotive. But we're running out of time. On that note, I would like to thank both our guests. Thank you very much, Brijesh and Sandeep, for helping our viewers with their queries. And that's all that we have on this edition of Ask BQ.
Thanks so much for writing in and calling in. But do remember, we're just a tweet, post or call away, so keep your queries coming in, and we promise to address as many of them as possible on our show. You can also log on to the website bloombergquint.com and search for the hashtag AskBQ and get answers to all the queries that were discussed on this show. Power Lunch is up next, so do keep watching. This is Bloomberg Quint.